The Fed held rates, the dot plot didn't change, and the market still sold off. On paper, the Fed's March dot plot looks identical to December, one cut for 2026. But underneath, the shift was clear. 4 to 5 members moved from expecting 2 cuts to just 1. The dovish end of the committee disappeared, and the data backing them up landed the same morning. February producer prices surged 0.7%, more than double expectations. Core wholesale inflation hit 3.9%, and that's before the oil shock fully feeds through. Markets heard the message. The Dow dropped 768 points to a new 2026 low. The S&P fell to 6624. Traders started pricing in 0 cuts for the year. Not 1, 0. The reason the Fed is stuck? The war in Iran keeps escalating. Kharg Island was bombed. Iran's South Pars gas fields were hit. Iran retaliated by threatening energy infrastructure in Saudi Arabia, the UAE, and Qatar. Brent crude is back at $120, matching the war's opening peak. The Fed was just the start. The ECB held at 2%, warning the war will have a material impact on inflation. The Bank of England held unanimously. They were expected to cut before the war started. And the Bank of Japan held at 0.75, with one member pushing for a hike. 4 central banks, 1 week, all paralyzed by the same war. Week ahead, watch how markets digest this week's central bank language. Watch gold. It touched $5,000 earlier this month, but has fallen back to $4,700. And watch oil. If Brent holds at 120, the zero cuts narrative hardens further. I'm Lewis from WeNews with WeTrade. Subscribe so you never miss a Monday. See you next week.